Yo, what's up everybody? How is it going today? It's now September the 6th, a Friday, about 4 p.m. Central Standard Time, here in Manitoba, Canada. And you know what guys? Take a look outside. It is just freaking beautiful outside today. Gonna get to enjoy a little bit of the weather that's left here in Manitoba before we have the Ice Age all over again. And you know what guys? I'm also expecting a lot of presents and donations tomorrow, September the 7th, because it's my birthday, and it's a day I get to be even more narcissistic. You know, it's a day where I can shower myself with love, and I expect all of my friends to shower me with love as well, right? Because talking to a camera and you guys all day is really not narcissistic enough. Anyways guys, this is going to be a very professional technical analysis today, because a lot has happened, and we're going to go through a bunch of different theories as well, okay? And the theory is really important to go through because we want to reinforce our hypothesis, right? So when we reinforce our hypothesis, we treat it like we're a scientist, where we're conducting an experiment and we want to see if it holds true or not true. This way we can also develop some of our skills. We can develop skills that would match our personality to trade. So first of all, let's look at the monthly. The monthly is an incredibly bullish candle thus far, but it is only 6 days into the week. I mentioned that I expect September to be fairly bullish, guys. Okay, so the monthly, not a lot of indication towards anything yet. So the best thing to do would be to look at the weekly chart first. Okay, so the weekly chart is phenomenal in my opinion. Do you remember before when I was talking about how the 13 moving average was fairly significant, right? And we were just bouncing off of each of these one? Well, as we can see right here, demonstrated clearly by the price action, that the purple moving average, the 20 or the 13, sorry, is definitely getting a huge reaction on there. Okay, and the 3-day, incredibly bullish 3 days. Okay, if you've noticed here, that's an incredible push from September the 1st, right? That during these 3 days, we moved up about 13%. And I've always mentioned that the best traders, they don't overtrade, right? They capitalize on profitability by maximizing the potential of a trade. So when you have a high probability trade that's very likely to succeed, you want to add size to it, right? But you don't want to market execute or limit order in one go. You want to make sure you're shedding accordingly and accumulating accordingly as well. Like for example, if you're trading with $250,000, you're probably not going to be day trading. There's not really a lot of the sorry, let me say it again. There's not a lot of volume right now to be day trading $250,000. Do you guys remember last year when I was trading, I don't know, like well more than 6 figures, right? And I just can't do it anymore because man, it's hard to day trade without this type of volume. Market cap needs to be exponentially higher as well, and there's got to be a lot more mainstream media. I've got to get a lot of retail investors in the game as well, and you know, institutions are obviously adding it to their portfolios as well now, secretly, right? Hey, I'm Jamie Dimon, don't buy Bitcoin. A few months later, he's secretly adding it to his portfolio, you know. So anyways, let's get on with this, okay? This is the 2 days, the 2 days looking decent as well. And what I would like to reference and make note of that you guys must understand is that 9,350 range is a huge support thus far that has been established since July the 16th, which is 52 days. Every time we get close to here, we end up bouncing off of it. And if you take a look at the 55 EMA as well, right? I use 55 because it's a Fibonacci number, right? It's like if you guys are familiar with the Fibonacci sequence of numbers, I use this 8, 13, 21, and 55. They're all Fibonacci numbers. But why do I not use my T line 200 as 213? I think it's 213. That's the next fib number close to here. It's like 200 because it's more so consistent long term with everybody else that's using it as well. So it's a really good T line that I like to use. Now, the most important one to me right now is actually the daily chart. Okay, the daily, the 6-hour chart. I'm going to tell you guys why. So actually the 12-hour is significant as well. Remember when I mentioned that we will always get some sort of reaction whenever we get sandwiched in between the 55 and the 200 moving average. And in this specific zone, it's going to break one way or the other. And the way that they break is usually a golden crossover, where the 200 moving average is supporting everything like right now. And the other one, of course, is the death cross. So this is the perfect example of a golden crossover right here. And a lot of investors look for this specific point, where you're getting a crossing where the 200 was above the 55, then the 200 moves well below the 55 and acts as a support. So this is a golden crossover, and the opposite of that is of course a death cross, if you're familiar with that. Death crosses always happen at the end of every major market cycle. Just for example, here is the first official death cross right there, right here, okay? Where actually here is the first official one. Wasn't that interesting? And usually we'll wait for a second one where I see an attempt to the upside, and then the death cross happens with a very violent opening of the fan. See this death cross right this section? Well, then we got a very violent drop to 35% drop. So why is this significant? Like a lawyer, you're using precedent to prove your case. So, you know, if every time there's some sort of reaction at the 55 and the 200 moving average, well, look exactly what happened right here, right? So we are actually finding support right now above 10,200. So guys, I'm gonna show you, you guys know what my 3 favorite words are in life? It's not I love you. You guys know what it is. Feed my ego. I'm just joking, guys. As a trader, I've got a really weird sense of humor this weekend because I'm just very excited for it, and there's a lot of things to look forward to. So I apologize if I'm overly enthusiastic today, but then again, that's usually how I am as well, right? All right, so, you know, I'm clearly just joking about the 3 favorite words, right? And I was referring to you were right instead of I love you. So, well, excuse me, gents and ladies. So, I was talking about basically 10.9K, okay? This was on September the 5th. And the reason why I mentioned specifically 10.9K is because of the interim swing high. Interim swings high just means that, you know, the short time frame of where that resistance was previously, right? So yeah, so we look at precedent, like I mentioned, and we use that to build a case to see if there's going to be some sort of reaction there. So right now, we clearly saw the reaction, $10,900, pretty much on the nose, right? And I'm wrong sometimes, right? And we're all wrong, you know. And I've done many technical analysis videos where they're wrong, and this one happens to be right and fairly dead on. But my point is that we always got to treat it long term, right? Who honestly cares about one loss when you're trading hundreds of trades, right? As long as you're profitable over time, you have a consistent winning percentage as well, and you're taking high probability trades of succeeding. Then even if you're wrong a few times, it really doesn't matter that much at all. So do you guys see on the 12-hour chart where we're getting a reaction right here? And do you also see on the 6-hour chart, we're getting a huge reaction at not only the 200 moving average, but also the 55 moving average as well. So that's kind of phenomenal, right? So what breaks to the upside? Well, when you break to the upside, you will get, basically, you're breaking a resistance that's going to turn into a support, right? It's logical to deduce that. If you break a support, like for example, $6,000 range in winter of 2017, right? Or sorry, 2018, February 6th, $6,000 was a really strong support for a long time. And then when we actually broke it with conviction, well, you guys know exactly what happened when we broke it, right? We dropped down to like 3K ranges. So now what I'm saying is, even for a short time frame, you can deduce that maybe this section right here is going to act as some sort of support, okay? So if I were to give you guys an Elliott wave analysis for this, okay, EWT, this is my deduction for these possible combos. I'm just going to do it very quickly, okay, guys? What I see with my eyes is this. This is 1, okay? And now this right here is actually, hold on, this is now 3. Okay, give me a second here. All right, so I got confused there for a second. I'm just going to do it on a higher time frame. I see this as 1, 2. I see this as possibly a 3, right? And I see this as possibly a 4, right? But this is definitely a 5, okay? But if I am wrong, then let me show you guys. Okay, let me just play it out for you. Let's just say that was 5, okay? We're going to argue all possible paths just for a few minutes here. So let's just say that this was 1, 2, 3, 4, 5. And this was a B that was a little bit higher. Or even the B could have been truncated there, right? So this is very likely. But another possible likely scenario is that the 5 is actually not even finished yet, and we're still doing a 3. And then what this ends up becoming is something like perhaps a 1, 2, and who knows, this could be a 3, right? Or 3 there. That could be A, B, C truncated, 4, and that could be 5. So if that was actually right, what it means is this. By, what is it called again? Where, I can't remember the exact name for it. Jeez, I can't believe I'm losing memory of the terminology sometimes. Someone refresh my memory. It is where if you get a retracement on wave 2 that's very little, then wave 4 will retrace usually more, right? It's like some indifference in, like, I'm gonna check out and let you guys know another time. But you guys know what I'm talking about, right? So for example, if wave 2 actually retraced a lot, then wave 4 will actually be bullish. So, you know, we just assume here that this is a pretty bullish retracement that we're gonna get for wave 4, because wave 2 here got exactly 0.65 in the golden pocket range, right? Okay, so now if by that deduction where wave 2 retraced that much, is it also logical to say that we could easily see a small retracement here only? And the most retracement that we will most likely see, in my opinion, is right around there, to around $10,000, right? $10,000 is a very, very psychological number. So now let's just play it out even further and just deduce, right? So that's 1, 2, 3, 4 is gonna be somewhere in there maybe. There's still gonna be a B going up, right? And then a 5 right there at most, in my opinion. 11,000, 11,200, roughly around that specific range. So now we're gonna back up a little bit and take a look at it on a bigger picture, okay? So now we're seeing the micro. Now we want to see the big macro picture as well, right? So now take a look at this, guys. Take a look at this resistance right here, okay? This resistance right there was amazing. Okay, we got one rejection here, but we wouldn't know it was gonna make this type of triangle yet. But this one right here was very easy, right? What we say is, wow, what a major rejection there. Getting a series of bearishly spinning tops, with bearishly engulfing candles, with a doji or shooting star, with a doji, huge bearish signals. So then, of course, people are gonna maybe short it, but some people are not that risky, nor do they trade on an exchange that can short. So what they'll do instead is they're gonna assume, wow, this is actually an incredible support right there. And they're also gonna say, hey, you know what? The 200 moving average looks pretty juicy to be interested in. And then instead of shorting from up there, they're just gonna wait to see the reaction of the support. And that's what a lot of people did. But my point is, now that these three specific structures are formed, as in 1, 2 right there, and the third one right over here, we can easily say that this is going to be a very, very relevant section over here at 10,000 or 11,000. You know what? I'm going to change it, guys. So remember this. I firmly said $11,000 before, but now I'm going to say at most 11,150. Okay, that's going to be my prediction. That's going to hit. Right, guys, you got to know first of all that we're in consolidation phase. Okay, let's not deny that this was an amazing run in the past week, right? I mean, we've gone up about 15% in the market, added a huge amount of money in the market cap as well. And let's also take a look at CMC. Let's take a look at coin market cap because it's been a while. So market cap right now is at $261 billion. Not bad. I want to see the BTC. Wow, BTC dominance is now back up to over 70%. Amazing. So you look at the 24-hour change. There are no double-digit coins right now in the market. They're all in the red though because of this correction that has happened recently. Let's take a look at the 24-hour volume as well to see what is doing great, or generally speaking. Let's go to historical data. Oh, let me go back to show you guys if you don't know how to do this. Go to coinmarketcap.com, right? Then click here where Bitcoin is. And right now, 24-hour volume is only $19 billion. That's very low volume. And then, you know, we're getting and then go here, historical data, okay? Go to historical data, and it's going to show you the volume, right? Here we're getting if you've noticed, September 31st, August 31st, September 1st, you know, not the best volume quite yet there, but, you know, it started to really gradually pick up. For example, here we're getting almost to 20 billion. 17, of course, now we're dwindling because we're consolidating. So when volume ends up dropping, you got to really wonder, right? Is the volume dropping because people are not supporting it at this region, or is just a sell-off? You know, people are not selling off anymore. Lots of questions to wonder. So this is actually my main count here that I have. This 1, 2, 3, 4, 5. So now I'm already interested in a long position. I want to see if we're going to get support above 10K. And if we do find some decent support above 10K and this specific green region right there, I'm definitely going to long it. And what's my RR going to be? Fucking, oops, excuse me, I promised you guys I wouldn't swear on camera anymore, okay? It would be effin'. My apologies, ladies and gentlemen. is maybe like that's really aggressive, 11,150. But realistically, I'm gonna go for 11,000-ish, and I'm gonna start shedding right above 11,900. I'll probably end up laddering about 4 different positions, and I'll probably shed it off in 2 goes at 10.9 and 11-ish. So then my RR, I would obviously try to ladder down here, but lately I have been a very conservative trader. So what I'm going to do instead is not ladder down that much and actually look for a little bit of confirmation first. So let's just say I entered on an average price. If it were to hit $10,000, I would enter at 10,200-ish, okay? And I would keep my stop loss freaking tight, guys. I'd keep it about 2% only. My R unit for the day, so you guys know, is actually only 1%. So we're going to allocate 2 R units today. And then we're going to do 2%. And then we're going to target around 11,009 as a very conservative target rather than very aggressive. So if this does hold true, then that's a 3.45 risk to reward with a possible 7% gain. This play $10,000. That's 7%. It's pretty big, man. That's $700, right? I mean, I don't know about you guys, but to me, a 7% day is huge, especially with an RR of 3.5 to 1. So it seems like a good trade to possibly be interested in for me, but at the same time, right, we don't know if it's going to be a trade quite yet that we're going to take, because we got to see it come to fruition. And until it comes to fruition, there's got to be a lot of rejection to the downside. I got to have that confidence, and there's got to be a lot of confluent reasons for me to enter this trade. So guys, I'm going to give you right now my bearish and my bullish summary for this specific technical analysis video for September the 6th. And I probably won't be making you guys a technical analysis video till about September the probably the 9th. I'll be back, guys. I'm going to be gone all weekend for sure. Okay, so now my bullish side is this right here, which is my main count and what I'm expecting to happen. I expect, once again, a bullish retracement above 10K to be supported, okay? It's just my thoughts, but I'm also ready for the bearish side, right? I'm absolutely ready for the bearish side. Remember, a good trader will always cover every single angle. If they lose a trade, first of all, they better know to stick to their stop loss, right? That's the most basic thing in trading. But of course, it takes a lot of discipline to actually learn that, right? So anyways, let's just review this quickly. So once again, I got to get that conviction, those confluent reasons to enter this trade, right? If it gets there, awesome. That's my bullish count. And of course, another bullish count for the far term would be a huge breakout above here. And then if we break out of here, guys, let's have a really bullish year, okay? Remember December 17th till then? We were so bullish from September till then. And then last year, in December 17 of 2018, it was the opposite. On that same day as the bull market ended was the same day that the bear market started. Remember? So once again, we were bullish to December 17, 2017. But December 17, 2018, the market just tanked. So, so what I'm saying is that around this time, one of two things is going to happen. Historically, we love quarter 4. Quarter 4, everybody's into it. It's like everybody's like, hey, it's Christmas time, guys. Let's either win a lot of money, make a lot of money, or lose a lot of money, right? So they're all just gonna, they're like, yeah, Bitcoin's gonna go up. Let's just put in our mortgage, put our 401k into 2 RSPs, get all your retirement money in there, and then that's why the market probably ends up spiking. It's kind of like Chinese New Year's. They're like, oh, Bitcoin's gonna spike up after Chinese New Year's, and like, why? Because a bunch of kids are going to get money from their parents for $20 and they're all going to pool to buy Bitcoin. It's just kind of funny little things like that I find hilarious in the market, right? And do you remember what happened for Chinese New Year's? Nothing! Actually, the market dropped. That's what happened. So anyways, I do believe we're going to have a pretty decent year. If this breaks to the upside, my target, easy, 12K. See you there. If we break 12K, easy. Next target, 12.5K. And we're going to go every 500 from then on. Now, do you guys want to hear the bearish count? Yeah. The bears with the fur. Everybody was dropping her. Bitcoin hit the floor. The next thing you know, everybody went short. Short. Just kidding, guys. So, yeah, this is the bearish count that you guys probably don't want to hear, okay? That we don't even get there, okay? And now we just end up dropping to this lower region right here. 10K won't even mean nothing, right? It means absolutely nothing at all. And then it just drops well past it. So if we do not find some sort of conviction with support above 10K, then we are going to be considered a bearish short-term trend. Right now, it is still a bullish medium-term trend in my opinion. Short-term, I'd still say bullish in general because, well, just because we're retracing, but overall still bullish. You never know for the day or for the next 2 days, right? So let's just say $10,000 does not hold whatsoever. Then we'll just end up dropping, right? Why would we even support anywhere else? So even if we don't hold above here, say like 9,800 range, then we're most likely going to hit the 9,400 range again. So the bearish side is that 10K doesn't hold, we drop to 98, and that does not hold either. See you at 9,400. And the longer term bear trend, if we actually see that, is we're going to get a huge drop. 8,800, still a number of mine. So there you go, guys. Thank you very much for joining me for today's September the 6th technical analysis video. I hope you had a lot of fun. I hope you learned a lot as well. And I do want to apologize if my sense of humor was a little bit too much today. And just so you guys know that I won't be here till about September 9th. And if you guys have any, the people on Udemy, I'm serious, guys. I'm answering a lot more questions. When I'm here on Twitter, I'm always messaging people on Twitter back. The DMs, like, I don't really have a lot of people to catch up to because I'm replying to like every single person almost right now. So if you guys are still interested in my course, go check it out. Go check out my Twitter page. It's right here. Okay, it's been getting some really good reviews, and I know the only negative review is basically I'm not available as much to talk to people on Udemy. But that's got to change, guys. It's not fair to you to take these classes, pay for something, and actually have no support whatsoever. So thank you very much for the support, and it's my turn to reciprocate that as well, to be there for you. So guys, if you're interested in it, check it out on my Twitter main page. It can only be processed by Udemy now, but you know, if you guys, it's the only way to use crypto, and you want to get it, let me know and we'll talk. But other than that, guys, make sure to reach out for me to any questions that you may have, because I'm really looking forward to getting to know a lot more of you down the road. So anyways, have yourselves a wonderful day and especially a great weekend. And thank you very much tremendously for the love and the support that you have always shown. And I look forward to seeing you on Monday. Bye now. Have a great weekend.